you get through cycles long enough, and you kind of, you start to get an instinct for what businesses are indestructible and what the difference between businesses that have temporary impairments and permanent impairments. And Intel, in our view, is very cyclical. I'm not even placing any real value on Pat Gelsinger's dream where he's going to make these high-end chips and he's going to have these fabs and all that stuff. All that for me is whipped cream. What I can see is basically the inventory cycle has bottomed, and over the next 6 to 12 months, it's going to start to turn. No one realizes it. And what you're going to see, as a matter of fact, Susquehanna today called the bottom, which was kind of interesting. The note, if anyone works for Susquehanna, please send me the note. I heard about it today. I didn't have time to look for it. So just on normalized PC and server and cloud demand, I think this thing can revert back up to, 55, 60 range. And from 25 basis, you don't need much. If you've got, 80% stock and then you got some exposure via options, you can really make a nice return and a nice IRR over the next few years. And if Gelsinger's plan comes to bear, then you've got a business that could be, $70 to $90 and really make a mint. In the meantime, it's a great place to park money. You get a little dividend, but you can see what happened here. And what's clear, leave away all the headlines. If you remember, 2020 was their peak, right? You had all the pull forward of demand while everyone was locked in their house. They had $8.12 of cash flow per share. They had $5.31 of earnings per share. And that was that. And 2019 wasn't a pull forward. So what does normalized commodity business look like? That's not high-end, not high-tech, not their own fab, not competing with NVIDIA. It's in design, et cetera, which they're going to start to if Gelsinger is right. And Gelsinger is the only guy that I would bet on being able to do it for Intel. But 724 and 489. So, 489 of earnings normalized, non-pull forward at, average. And once they start growing again, they're not going to trade at 12 times, which would be a $50 stock. They're going to start to trade back to 15 plus once they can show growth and start to promote the promise of the future. Remember, despondency reverts to euphoria over time. They'll start to buy the story and they'll start to assign a ridiculous multiple. And that's how you can take the same $5 in normalized earnings with a new story with the 20 multiple. It gets you to an $80 or $100 stock versus a $45 or $50 stock if everyone's still pessimistic but the cycle turns. So, like in poker, which I've got to go to in about an hour, there are many outs. And this one I think have enough outs. But you can look at the stock price from 60 down to 30 or 25. That's very simple. Well, they cut their earnings in half. They cut their cash flow in half. It should be trading down here. So you're making a bet that the inventory cycle is cyclical. We're at or near a bottom, and that's why we're involved. And we could be wrong, and it could be the next IBM. But I'm betting on the jockey here, and this one is a little less obvious than some of the others, because you have to have a little faith versus just deal exclusively in the numbers, and it's sized proportionately. This is not our top 3 weights or one of our highest conviction ideas. This is a part of the portfolio that we think can meet the IRR expectations that we have over the next 3 years, and this fits in the bucket. So we like it, and we want exposure to that group, and that group's been starting to be on a tear, and people are starting to see what we see. So that's a good thing.